basically shows the history of A, B, and C in Montreal. You can see a very telling element that's been missing since probably 2004, and that is the lack of any new supply. Have you, in your career, ever seen a period of time with such little supply ever coming into the Montreal market?
No, but I think the interesting thing to see then is a year ago we were looking at a decrease in negative absorption, but we were looking at 250,000 square feet of negative absorption. This last quarter, we've experienced about 130,000 square feet of positive absorption. So the recovery is there. I mean, I don't know if I was optimistic as the speakers earlier, but pessimistic optimists in the brokerage community, but we're seeing a mild recovery, as the slide indicates. We've got some positive absorption. We're forecasting maybe 250,000 square feet of positive absorption this year, but really compared to Toronto, of what, 2.7 million square feet projected absorption this year, Calgary 2.3. It's itty bitty, tertiary recovery, but for us it's very new. It's positive, so everything's positive.
Okay, moving to the next slide, we'll see. We're seeing now, the next slide sort of shows the direct vacancy in A and B and how you can actually see the movement in those graphs that demonstrate what happened. It was obvious when the economy hit. Are you seeing with the tenants in the market now that the worst of the economy is behind us and we're starting to see a little growth coming from within tenants and that expansion is coming from existing tenants?
Absolutely. But with this slide, we're getting a bit of panic from tenants that are expiring in the class and who are expiring with existing subleases. So they're experiencing price shock, and now they're panicking, moving. We're looking at movement from A to B, and we've got downtown tenants looking at peripheral markets, suburban, West Van, the Karen corridor, because they can't afford what's coming at them in terms of A-class renewal rates or coming out of existing sublease situations.
Which brings us to the sublet slide. Excuse me, not the sublet slide, but yeah, sublets.
Well, I mean, everybody, again, last year we were looking at about 10,000 square feet of new product coming on the sublease market every week. And now we've got a lack of good sublease opportunities. You look at the graph, maybe 300,000 square feet of A-class market wide. You see the distribution between A, B, and C. It's coming down. A lot of the subleases are short-term subleases, and the tenants who are expiring in existing situations and coming out of existing subleases are grasping at straws, looking for new sublease opportunities or as-built space where they don't have to build out $45, $50 a foot because they don't want to guarantee that TI and looking for a drop in situations.
Okay, this is a very telling slide. It talks about contiguous space in downtown Montreal. It's obvious that this has changed. If you were looking at this slide a couple of years ago, Lloyd, how different would it have been then and compared to today?
This is the driver for new development. As a broker, I mean, we're looking for 50,000 feet or more. Downtown central area, there's nothing around. Look at the options. It's scary from a broker's point of view and from a tenant's point of view. What is out there? What are the location alternatives for tenants who are expiring, in the next 2 or 3 years? What's out there? So with a modest GDP recovery of under 2% and a modest absorption forecast of, in 2012, we're looking at, let's say, 300 to 500,000 square feet is a more realistic absorption number. The vacancy curve by, 2013, 2014 is going to approach 3%, which is zero. But again, going back to, if the economics, if the vacancy and the net effective rates drive up so that new space and older space, the rental rates are not far off, then yes, let's move into new buildings. If we're going to move into a new building, it better be LEED, because no new buildings are going to work out if they don't have some level of LEED. Quartier International is ahead of its time. Is that the place to be? Is that where the new development's going to be? Probably. Caisse de dépôt went down there creating, a whole niche of where people want to be now. So, we lived through everybody going up to McGill College to Mason, area. Now we're looking at it going back to St. James Street, to where, you know, the private sector came from. So yes, those stimulus packages were on the provincial side, stimulate. But then you get the municipal grant packages, you know, the Chabanel area, you know, if there's not, I think if there's not a tax-driven stimulus, you know, from the province, I don't know if that's enough to generate action. You know, Chabanel, so I said they're, you know, they're putting in the infrastructure, the streets, and a train station, but is that enough to drive business there without those grants and incentives?
Merci encore à Montreal Real Estate Group for having sponsored this session. Des référés les écrans pour les prochains événements. Il n'y aurait pas de pause de café. Encore une fois, merci beaucoup.